Here we're going to talk about getting rich investing. First of all, let's understand if it is possible. And the only way to know whether it's possible or not is to look at examples of people who've actually made it. So we're all familiar with this face. This is Warren Buffett. He's one of the richest investors and people on the planet, and he's made his money through investing. This is Charlie Munger. You can say he was an accomplice with Warren Buffett in building billions of dollars. And then we have Carl Icahn. Other examples are Benjamin Graham and George Soros. So there's definitely a lot of scope for people to make money through investing. And these individuals, although they are public figures and maybe even cliched with investment, but the fact is they made their money through this and hence it's possible. And how did they do it? They picked opportunities, they invested, and they stayed invested. So let's understand this. Alright, people do make money, but is it really easy? Well, the answer is no, it isn't. It's emphatic and it's true. You cannot make money investing by just relaxing. It's just not going to happen. So what does it take to make money through investing? First of all, it has to take a lot of effort in gaining knowledge and applying that knowledge and staying up to date with knowledge, because the markets don't remain the same, the stocks and the companies don't remain the same, the economy doesn't remain the same, theories don't remain the same. You have to remain updated. But why go through that effort? Well, the previous slide, if that's not good enough, then I don't know what is. Next, consistency. You need to invest and you need to track regularly. Now this is where people get really lazy. They'll say that I don't have the time to track. I can't go and do all this gaining knowledge and then going and finding out what stocks to invest. Well, too bad. If you don't have the time, make it. I mean, isn't that how people do anything in life anyway? You have to find the time and make that time. Set aside certain amount of time every month and then invest, and then track the previous investments to realize whether you need to actually continue with those investments or make any changes. And finally, you need to really have a lot of patience. You have to give things time to grow. Nothing is perfect, neither is investing. So in terms of investing in stocks or any other sort of assets, there will be times when you're going to make losses, but that does not always mean that you need to sell that stock. Maybe it's a blip in what is going to be followed by a rally and the stock is going to rise. So you need to understand those patterns, and that is what this course is about, and that is what all the courses that I'll be teaching on Udemy with relation to investing are going to be about. It's going to help you gain knowledge, it's going to help you be consistent, and it's going to help you remain patient. Now, before we conclude this lecture, it's very important to understand the power of compounding, and this is the single most important factor in making investing a success. This is what has made Warren Buffett, this is what has made Charlie Munger, this is what has made all the other examples that we've seen in this lecture so far. These people have practiced the principle of power of compounding. And what power of compounding essentially is, it means setting aside a certain amount of money, growing at a consistent rate, and that amount of money would, along with the income earned, which may be interest or dividend or whatever, would become like a snowball. So if you can imagine a snowball, it all starts with a snowflake, but by the time it's down the hill, it's so massive it can probably bulldoze houses altogether. Now let's take an example. A $10,000 amount invested today in 10 years at 10% interest rate would double in 10 years, $20,000. Doing nothing, that's passive income. Now imagine that if that $10,000 were to be invested in the stock market at 20%, you would make 20,000 in half the time, in 5 years. Now, I'm not saying that it's going to be 20% every year. There's going to be ups and downs. You're going to make maybe 30% in a year. You're going to probably lose 10% in another year. But never mind. If you stay invested, if you have the basics done right, if you've done your homework, if you've tracked your investments, you're going to make more money than anybody else would, because that $10,000 would probably be spent on anything, on something on Amazon, or it might be lying in your garage and you won't even know about it. You probably even have some stuff which you've bought and you never realized why what to do with it. We've all done that. We've all been there. So I wouldn't say give up on luxuries in life, but I would definitely say set apart some amount of your money which wouldn't hurt you getting lost, or instead of spending on things which are frivolous. Now, Albert Einstein is probably regarded as one of the smartest people ever. And this is what he had to say about the power of compounding, and I'll leave you with this. Bye for now and enjoy this quote.